Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. World stock market indices declined in unison as investors faced a deluge of corporate earnings, a flood of economic data, and political outcomes. Investors turned cautious ahead of the U.S. presidential election next week, and in political upheaval, Japan's ruling coalition lost its majority in the parliamentary elections. Let us start with the key economic updates in the U.S. The U.S. economy added 12,000 jobs in October, well below the 223,000 jobs in September. The non-farm payrolls rose the weakest since December 2020 due to the impacts of Hurricanes Helene and Milton and months-long strikes at Boeing and hotels in Hawaii and California. The unemployment rate was steady at 4.1%, and average hourly wages increased 0.4% from the previous month and 4% from a year ago to $35.46. The so-called JOLT report, or the Job Openings and Labor Turnover report, confirmed that job openings decreased slightly in September, reflecting less hiring. More worrisome was the update on the alternative measure of inflation in September. The PCE price index slowed to 2.1% in September, but the core rate of inflation, which excludes food and energy, stayed elevated and stayed at 2.7%. Despite 11 rate hikes over 2022 and 2023, inflation is well anchored and showing little signs to slow down further. The Eurozone consumer price inflation rebounded to 2% in October from 1.7% in September, which was the lowest since April 2021. The rebound in inflation was expected because of the base effect of the last year, as last year's sharp declines in energy prices are no longer impacting annual calculations. In other economic news, the annual pace of GDP growth in the third quarter slowed to 2.8% from 3% in the second quarter in the U.S. The private sector added jobs at the fastest pace in more than a year, according to the October update from ADP. Private payrolls expanded by 233,000 in October, faster than the upwardly revised 159,000 in September. However, the monthly data released by ADP is subject to sharp revisions and highly unreliable. Inflation in Germany, France, Spain, and Switzerland eased, largely reflecting lower energy prices. China's official and private service confirmed a rebound in manufacturing activities in October. Moreover, new home sales in China at 22 leading home developers across mainland China soared 66% from the previous month in October and advanced 2% from a year ago, according to China Real Estate Information Corp. New home sales rose for the first time this month after the People's Bank of China announced a raft of monetary measures and local governments eased restrictions on purchases. The Bank of Japan held its key lending rate at 0.25% as widely expected and retained its inflation and growth outlooks for the current fiscal year. Central Bank also kept its core inflation, which excludes fresh food prices, estimate at 2.5%, but lowered its overall inflation outlook to 1.9% from the previous estimate of 2.1%. Central Bank held its real economic growth estimate at 0.6% in fiscal 2024 and 1% in fiscal 2026, but lifted its fiscal 2025 estimate to 1.1% from the previous estimate of 1% in July. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury edged higher to 4.3% after the latest economic data favored higher for longer interest rates profile. Crude oil prices eased 2% to $70 a barrel in Texas amid supply glut worries and the weaker demand growth outlook for China, but elevated tensions in the Middle East weighed on the market sentiment. Natural gas prices in Europe plunged 8% to €38.80 per megawatt hour amid fresh worries of ample supply and warmer weather conditions. The euro hovered near a two-month low of $1.08 as investors continued to anticipate aggressive rate cuts in the U.S. The yen weakened to 152.60 after the Bank of Japan held steady its key lending rates and grappled with political instability after the LDP-led coalition lost its majority in the lower house of the parliament. We now shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and the Nasdaq Composite declined after tech stocks lost ground following cautious statements from Microsoft and Meta platforms. European markets extended losses for the second week in a row after investors reacted to a flood of corporate earnings and key economic releases. Nikkei 225 stock average extended losses to the third week after a batch of mixed earnings and tech stock weakness compounded policy uncertainty and political instability after the LDP-led coalition lost its majority in the parliament. Hong Kong indices extended losses to the fourth consecutive week as investors awaited the release of fiscal measure announcements next week. Indian stock market indices declined for the fifth week in a row after a batch of weak earnings and persistent outflow of foreign funds ahead of the U.S. presidential election dented market expectations. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Amazon increased 7% after the online store and services provider reported higher earnings and revenue, driven by a 19% increase in sales for its cloud services. Apple reported sales and earnings that surpassed market expectation in its latest quarter, but net income declined after the company paid a one-time charge linked to tax levy imposed by the European Union's agency. Apple said its China business is stabilizing after sales declined in the previous 4 quarters in a row. Intel reported a loss after the company took one-time charges totaling $16 billion, but lifted its sales outlook for the current quarter, citing improving business trends. Intel's foundry business segment revenue declined 8% to $4.4 billion and generated an operating loss of $5.8 billion. AMD dropped 9% after the company's quarterly results and guidance fell short of investor expectations. Microsoft declined 5% after the software company reported strong quarterly results, but the company's revenue outlook for the current quarter fell short of investor expectations. Alphabet, the parent company of Google's search engine, reported better than expected revenue growth. Starbucks reported sharply lower than expected revenue and earnings in its latest quarter amid demand weakness in the U.S. and China. Uber Technologies dropped 10% after the ride-hailing service provider reported strong quarterly earnings, but gross bookings disappointed investors. BNP Paribas and Société Générale in France reported diverging results, and BNP Paribas' commercial and personal banking unit struggled amid weakness in automobile financing. Shell plc launched a new stock repurchase plan of $3.5 billion to be completed by January 30 of 2025. HSBC Holding reported rising revenue and earnings in the September quarter. In the week ahead, U.S. presidential election could impact stock trading around the world next week. In addition, the U.S. Federal Reserve is set to announce its monetary policy decisions, and investors are divided about the possible rate cut to 25 basis points or no change in rate. On the earnings front, at least 500 companies are scheduled to release their quarterly results, including Toyota Motor, Ferrari, AIG, CVS, Qualcomm, and Marriott. In Europe, the Bank of England is expected to lower its key lending rate by 25 basis points. Germany is scheduled to release its international trade data, and Sweden and Norway are set to release their rate decisions. In China, all eyes will be on week-long meeting of the Standing Committee of the National People's Congress. Lawmakers are expected to increase budget deficit levels, paving the way for the government to deliver on the previously pledged fiscal stimulus measures. In Japan, investors are looking forward to the possible formation of an alliance between LDP Komeito and Democratic Party for the People, ending political instability for now. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic data updates on ticker.com and 123jump.com. You can find the latest financial books on Rudera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will